Assalamualaikum warahmatullahi wabarakatuh. This is a group presentation assignment for FIN420 Financial Management. We are from NBTM 2A Group 4 and this assignment is about financial ratio analysis. Okay, let me introduce my team member. Nurul Syafiqah binti Muhammad Zaki, Ruzana binti Muhammad Yusof, me myself Suhazrin binti Saidin, Zuhaira binti Zulkifli and last but not least Syamimi Izzati binti Muhammad Zamzuki.
Hello, hi, I'm Ruzana. So let's moving on to our company profiles. Our study covers 5 major Malaysian companies that represent different area of the healthcare sector. We can easily divide them into 3 groups. First, we have our hospital operators, KPJ Healthcare and IHH Healthcare. They focus heavily on managing specialists, hospitals, diagnostic services and international healthcare facilities. Second, we have our pharmaceutical players, Dio Pharma Biotech and Pharma Niaga. Dio Pharma focus on research and making generic medicines, while Pharma Niaga leads the large-scale distribution of medical supplies to hospitals. Lastly, we have Top Glove, a global manufacturing leader that produce and export medical and surgical gloves worldwide. So let's understanding this profile to help us see what their financial ratios like profit margin and cash flow that vary so much depending on their core business. So now let's look at the financial data.
Hi everyone, my name is Zuhaira. Let's look at the current ratio trends from 2023 to 2025. The data reveals a clear split based on each company's business model. First, manufacturer, Duo Pharma and Top Glove show strong upward trends, reaching 4.50 and 2.70 by 2025. They maintain large short-term assets to manage global supply chain and protect cash. In contrast, hospital operators KPJ and IHH exhibit downward trends, dropping from 1.17 and 0.58, while a ratio below 1.0 look risky. It is a strategic norm for hospitals. The predictable daily cash inflows from patients allow them to safely run on lower liquidity to fund active physical expansions. Finally, Pharma Niaga shows a remarkable recovery, rebounding from a critical 0.51 to 0.91 as they execute their successful restructuring plan. In short, manufacturing entities require heavy liquid buffers, while healthcare services providers operate efficiently on faster operational cash cycles. Next, we look at the quick ratio trends, which exclude inventories to measure immediate liquidity. Once again, manufacturer lead the chart. Duo Pharma rises steadily from 2.60 to 2.89, while Top Glove recovers strongly from 1.33 to 2.06. This proves they hold ample cash reserve, mitigating any stock obsolescence risk. Conversely, our hospital operators show a continuous drop. KPJ fell to 1.11 and IHH compressed down to 0.52. This is completely safe because hospitals do not depend heavily on physical inventories. Their rapid daily cash collections from medical billing provide immediate liquidity. Lastly, Pharma Niaga remain tight but show positive progress, doubling from critical 0.24 to 0.46 as they streamline their post-pandemic operations. In short, manufacturing firms prioritize the liquid cushion, whereas healthcare service provider run successfully on faster operational cash cycles.
I'm Nur Syafiqah. I will present the debt ratio analysis of 5 companies from 2023 to 2035. The debt ratio shows the percentage of asset financed by debt, where a higher ratio indicates higher final risk. Pharma Niaga recorded the highest debt ratio, decreasing from 114.31 to 79.56%. KPJ Healthcare remains stable around 63 to 65%, while IHH Healthcare increased slightly from 35.53% to 40.81%. Duo Pharma showed improvement by reducing its debt ratio from 40.62% to 31.02%. Meanwhile, Top Glove had the lowest debt ratio despite an increase from 16.08% to 23.89%. In conclusion, Pharma Niaga had the highest financial risk, while Top Glove had the lowest debt burden, and Duo Pharma showed positive improvement. Next, I will present the time, interest, and TIE ratio analysis from 2023 to 2025. This ratio measures a company's ability to pay interest expenses using operating profit. A higher TIE ratio indicates better interest coverage. Top Glove recorded a negative TIE ratio of negative 71.0 times in 2023 due to lower demand after COVID-19 but recovered to 6.39 times in 2025. KPJ Healthcare improved from 2.52 times to 3.54 times, while IHH Healthcare remains strong despite declining from 5.19 times to 3.97 times. Pharmaniaga increased from 0.36 times to 1.22 times, whereas Duoproma slightly decreased from 1.42 times to 1.20 times. In conclusion, Top Glove showed a greatest improvement. KPJ Healthcare achieved steady growth, and IHH Healthcare remains strong, while Pharmaniaga and Duoproma recorded a lower interest coverage level.
Okay, now I will present about activity ratio. First is about average collection period. Analysis indicates the Pharmaniaga demonstrated the strongest performance with the shortest collection period of 26.14 days in 2025, showing higher efficiency in converting receivable into cash compared to the other company. Top Glove also maintained relatively strong performance despite an increase in collection days. IHH Healthcare ranked in a moderate position with a collection period of 47.05 days, performing better than KPJ Healthcare and Duopharma Biotech. KPJ Healthcare recorded a longer collection period, suggesting slower receivables management. Dua Pharma show the weakest performance with the longest collection periods of 87.66 days, indicating lower efficiency in collecting receivables. Overall, Pharmaniaga and Top Glove demonstrated stronger receivable management, while Dua Pharma Biotech may need to improve its credit collection efficiency. Second is about fixed asset turnover. It shows differences in the efficiency of the company in utilizing fixed asset to generate sales revenue. Pharmaniaga recorded the strongest performance with its fixed asset turnover increased from 6.61 times in 2023 to 7.51 times in 2025, indicating very efficient use to fixed asset in the generating sales compared to the other company. IHH Healthcare maintained relatively strong performance with the ratio around 1.46 times to 1.56 times, although the slight decline was observed over the year, suggesting a small reduction in asset utilization efficiency. Meanwhile, KPJ Healthcare showed continuous improvement from 1.23 times to 1.53 times, reflecting better use to fixed asset in generating revenue. Dua Forma also improved from 1.05 times to 1.4x time, indicating enhanced operational efficiency. Last but not least, Top Glove recorded the lowest ratio despite improving from 0.5x times to 1.04 times, suggesting that its fixed assets generated lower sales compared to other company. Overall, Pharmaniaga demonstrated the best asset utilization performance among the five companies, while Top Glove showed the weakest performance, although general improvement was achieved over the period.
Okay, hi. I will share to you guys how well our five companies managed their core business profit from 2023 until 2025. And as you can see, their results are very different. First, our Top Glove is our biggest comeback story. They went from a terrible loss of 40% in 2023 all the way up to a positive profit of 4% in 2025 by cutting unnecessary costs. At the same time, our hospital groups, IHH and Capital Healthcare, are the clear winners. They safely kept high double-digit profits around 60% by the end of 2025. On the other hand, our medicine maker faced tougher time. The former profits slowly dropped down to 8.98%. Meanwhile, Pharmaniaga was very unstable, jumping up and down over the 3 years and finishing at a weak 1.90% due to poor cost control. So to wrap up, hospitals have the most stable profit, while manufacturing companies are still fighting hard to bounce back. Okay, now let's look at return on equity from 2023 until 2025. This ratio shows how well each company creates a profit from its shareholder investment. So as you can see on the chart, Pharmaniaga had a dramatic journey. They hit a massive negative ROE at negative 91.67% in 2024. But made an incredible recovery to 10.24% in 2025. Top Glove also shows a steady comeback, moving from negative 15.60% up into positive territory at 2.20% by 2025. So our most consistent winner is KPJ Healthcare, which leads the pack with a very strong ROE of 13.36% in 2025. On the other hand, both Dio Pharma and IHH Healthcare saw their returns slowly drop every year, with IHH finishing lowest at 6.60%. To conclude, 2025 was a recovery year where almost all companies successfully brought positive return back to their investor.
Assalamualaikum, my name is Syamini Zati binti Muhammad Zamzuki. Now I will continue with earning per share in market performance. This chart shows earning per share for 5 healthcare companies from 2023 to 2025. IHH Healthcare remains the highest, so it declined from 33.5 cents to 23.8 cents, showing stability in the hospital sector, while KPJ and Dio Pharma show consistent growth, rising to 8.36 cents and 9.09 cents respectively. This proves the resilience of hospitals and pharmacies. Top Glove and Pharmaniaga are more volatile. Top Glove only recovered slightly to 1.3 cents, while Pharmaniaga dropped sharply to 1.4 cents in 2025. In conclusion, hospital and pharmacy companies offer more stable earnings per share compared to glove manufacturing. Okay. Now I will present about dividend yield or DY. The slide presents dividend yield or DY for 5 healthcare companies from 2023 to 2025. Dividend yield measures the cash return investor to get dividends compared to the share price. The formula is dividend per share divided by share price multiplied by 100%. Looking at the chart, KPJ has the highest DY starting at 233 in 2023 and dropping at 157 in 2025. Dio Pharma also show a higher yield ranging from 42 to 50%. IHH Healthcare is more normal and stable, between 3% down to 1%. In contrast, Top Glove and Pharmaniaga record 0% for all 3 years. This means they did not pay any dividends during this period. It's likely because of the net loss, especially for Top Glove after the post-COVID oversupply. In conclusion, hospital companies like KPJ and IHH can still reward shareholders with dividends, but glove and pharmaceutical companies suspend dividends to save cash. A higher DY show the company is the more shareholders friendly.
In conclusion, the financial analysis from 2023 to 2025 showed that IHH Healthcare and KPJ Healthcare achieved the strongest overall performance with a stable financial position and consistent growth. Among pharmaceutical companies, Dio Pharma performs better than Pharmaniaga due to its lower debt and strongest financial structure. Meanwhile, Top Glove showed the most significant improvement by recovering from earlier financial challenges. However, this analysis has limitations because the companies operate in different industries and are affected by different economic and market conditions. Overall, IHH Healthcare and KPJ Healthcare are the most stable performance, while Top Glove demonstrate the greatest recovery during the period.